Hello everyone, and thank you for joining us today to discover how location intelligence helps organizations better understand and manage risk. Some brief introductions. My name is Alex Martinick. I'm Esri's Commercial Industry Specialist for Financial Services and Insurance. My primary responsibility is to shape Esri's global strategies for risk management. This encompasses everything from business continuity planning to catastrophe response and claims management. I've been with Esri now for nearly 3 years, starting off on our defense intelligence team, and recently I transitioned into helping our private sector users grow their business by minimizing disruptions. My passion is understanding complex problems and how geographic information systems can help analysts dissect multivariate challenges into smaller, more easily understood components. In doing this, they uncover actionable insights that would otherwise go unnoticed. In this view, over 100,000 financial transactions are being visualized to show the spatial-temporal relationship between fund transfers. This serves as the foundation to examine potentially fraudulent activities. But I've also worked with our market development team. Here, custom market jurisdictions are being analyzed based on their suitability for a retailer, but these same principles are applicable to hyperlocal risk scoring, challenging traditional underwriting processes that rely on yes-no questions like, is this property in a flood zone? A lesson that we've learned from Hurricane Harvey. Here, insurance organizations can ask, what is the relevant exposure of this property to a flood zone, and how can it be affected by several different scenarios? This is the introduction to our new series on risk management, again, applicable for both business continuity planning, but also the traditional insurance workflows from understanding, identifying, and managing risks. Our next installment will be looking at how to uncover hidden risks using the science of where, best practices for spatial analysis and portfolio viewing. After that, we'll be looking at common mistakes that are made with statistical analyses that can ultimately affect the combined ratio of a portfolio, and we'll look at why accuracy matters, again, looking at the case study of 2017 from Hurricanes Harvey, Maria, and Irma, and how accuracy and precision really do affect portfolios when it comes time to looking at catastrophic events. After that, we'll be jumping into a hot topic, which is big data analytics. Here we'll look at how you can manage your data and not let your data manage you. Insurance companies, retailers, even real estate professionals have access to an incredible amount of information, and this is both a benefit, but it can also be a risk within your business operations. They can be cumbersome, they can take resources and times. Here we'll look at the best practices on how to make sense of all this data and how to avoid going down avenues that aren't productive. But being right is only one part of risk management. If you are able to find the right answers, how do you share that quickly with decision makers in a way that they can understand? Afterwards, we'll be looking at developing agile applications for sharing public information. These are done without coding, and they're perfect during crises for shared situational awareness. Lastly, we'll be looking at how to implement changes within your organization. Innovation is tough for any group. No matter how small a project, new technology can be daunting. Here, we'll share the best practices on how to start with projects and move from there to have great change within your organization. I'm here today to talk about a fundamental and oftentimes underappreciated aspect of risk management. That's communication. I want you to think about value for a moment. What is the value of being right during a catastrophic event like Hurricane Harvey, Irma, or Maria? Well, during my early years, I met many aspiring analysts who had been right about trends or patterns and were able to generate insights that others could not. But ultimately, their knowledge, insights, and expertise went to waste. Why is this? The primary reason is that knowledge, wisdom, and specialized skills are ultimately worthless unless you're able to clearly communicate with decision makers and stakeholders. Like me, many of you may have experienced difficulties winning an audience at some point in your career. In some cases, we fall back and say that our audience is stubborn in their reluctance to accept the information objectively. However, more often than not, the issue is less about what the data has to say and more about how the information within it is being communicated. I've had the pleasure of working closely with a man named Matt Felton. He's the president of an Esri partner here in the United States called Data Story Consulting. Whenever Matt and I meet, we discuss how most people can't understand data at the data level. Very few can. Even when you roll that into information, tabular, charts, and graphs, it's difficult to pull actionable insights from that data. The only way to truly understand it is to tell a story. And I don't mean this in the once upon a time sense. Rather, using location as a common theme, or to put in database management terms, a shared key to relay the information. And location is a powerful lens that we can use to take highly complex and multidimensional data and convey meaning clearly to our audience. We all relate to locational data on an intuitive level. I want you to think about the first time you saw a map of an area that you were familiar with, whether it was a printed map within a textbook or a digital map online. Chances are, if you knew the area, the first thing you did was look for a common point of reference that you could relate to, whether this was where you lived, where you worked, your favorite place to go shopping or get a cup of coffee. Most people don't realize that every day we are exposed to a multidimensional world that we navigate without thinking about it. And location is that common lens to interpret, not just spatial, 2D and 3D, but also temporal. In the morning when you wake up, you know what time you have to leave for work. You're traveling from one place to another, traveling through space and time. Illustrating where events are occurring and where policies are at risk, for example, is a far better start than just communicating what's at risk with static figures to your decision makers. Clarity, though, is only one component of communication. I want you to think about value again. What is the value of being right and communicating clearly with your stakeholders, but the information conveyed is not relevant? I don't just mean topically relevant, but temporally relevant. And time is our main adversary when we're looking at risk and catastrophic events. Under normal circumstances, information can depreciate within 24 hours of collection and analysis. However, during CAT events, the situation on the ground can change at any moment. And how do we compensate for this? I want to discuss the concept of strategic agility. This is the ability for an organization, whether it's in the financial space, the real estate space, or within insurance itself for claims, the ability for an organization to quickly identify adverse conditions, uncover the unknowns, and implement solutions to monitor evolving situations to make the most informed decisions possible. This is something that many on this video do incredibly well, but the broader commercial space has not really embraced this idea yet. And the main reason comes from how solutions have been designed and implemented and antiquated expectations of what those solutions are supposed to do. For decades, organizations, both commercial and governmental, have been preoccupied with the notion of a common operating picture. This is the single tell-all view during an event. But I'm here to tell you that there's no such thing as a common operating picture, because during a catastrophic event or a crisis, the needs of analysts and decision makers are not common. This is where we need to be aware of scope creep. The view needed to track and monitor wildfires, for example, is different from mudslides. Even though these events are not mutually exclusive, the information is distinct, requiring unique analytical workflows and visualizations. This is what we'll be covering along this series of videos. We mustn't strive for a comprehensive application that seeks to achieve all things. Rather, a unified platform and data hierarchy that empowers analysts to leverage their expertise and produce event-specific information products quickly without consuming undue resources. It's not about a single view. It's about a common data source that enables these groups to take their backgrounds, exploit the same data, and share their expertise when it applies to a specific incident. In this respect, the common operating picture is replaced with what we call shared situational awareness. For many, this line of thinking seems counterintuitive. Agility requiring the production of more applications. It's easy to associate more applications with more work. But consider the distribution of tasks. Many of the organizations I've worked with that strive for a common operating picture ultimately produce this single view with complex features that requires more time for production and training, and ultimately they're unable to reconcile with situations outside of the initial parameters of that application. After all, coming from my development experience, how can we know now to develop what we don't know tomorrow during the event? Agility is important during these evolving situations. This implementation of a common framework is the nexus of a clear communication and timely delivery. But let me show you an example here in a moment. I'm going to be bringing up what we call a story map. This is one of the many templates that we have at Esri for sharing information digitally, all via web, to take the traditional mapping and cartographic software on a desktop and put it all into a browser-based situation. And here we have what we call a cascade story map. I'm going to be discussing some of the events of 2017. For those who weren't aware, the last 4 months of 2017 was incredibly costly for the insurance industry, but also for businesses. Ultimately, the damages range in the hundreds of billions of dollars, and some estimates have up to $500 billion worth of losses and disruption from 4 hurricanes and a series of wildfires in California. Again, this is a 4-month period, geographically dispersed in the United States, but ultimately resulted in 2% of the U.S. GDP being lost in disruption. So I'm going to be telling the story here, and I want you to keep an eye out for 2 things. One, how these types of situations can be conveyed differently to stakeholders. And 2, how we can create single views for decision makers that only focuses on the data that they're looking for. I've lived in California now for 14 years. Where I live, we've been in a drought now for 9 years, and we started water rationing about 5 years ago, and it's gotten pretty intense. But in 2017, we were fortunate enough to have an El Nino year, which led to severe rainfall in various areas. And while this replenished the aquifers and the reservoirs and desperately aided us within the drought, this sparked a bloom of low-lying shrubbery and flowers. Now, we referred to this as the super bloom in California. It actually brought in tourism. It was spectacular at first in the springtime as hundreds of thousands, if not millions of flowers started blooming within the mountains all over the state. Brought in tourists, and it was great to look at until the hot, arid summer months came and killed all the flowers. Now, when the shrubs and the flowers died, this led to the perfect fuel for wildfires, which we'll be looking at here in the Thomas fires. This data is based off the Thomas fires. However, we have had to make different manipulations and assumptions to demonstrate today to you. Let's get started. Here we can see in Santa Barbara and Ventura County where a series of blazes have erupted from lightning strikes during the hot fall months. CAL FIRE, who is a user for Esri, quickly produces a public information map that they're able to export to ArcGIS Online so the broader community can have a situational awareness of where they're actively fighting the blazes. From the insurance perspective, an analyst is able to take this data and look at where the feeds are coming from, where is there an active blaze, and overlay policies for their decision makers. In this view now, we've overlaid our policy data on top of this fire data. You can see that every policy is represented by a point, and we can start to understand and make decisions. Well, we can see that more policies are outside of the fire zone than inside of the fire zone, which is great for this insurance company. But we need to know more about these points. All of these in the web layer are interactable. We can look at policy numbers, we can look at insured value, and we can look at when the last time it was edited. But this view only tells a part of the story. There's only so much insights you can generate from dots on a map. Here, the analyst has overlaid a custom tessellation. A tessellation is a uniform grid of standard shapes. In this example, we've taken the hexagonal bin, so we can start querying based on standard locations. The reason the tessellation is more accurate than political or natural boundaries is that these events can transcend them. The fires are not going to stop at the county line, as we can see by the map. Aggregating the data up now, decision makers have a more accurate view of where they have the highest concentration of policies. As we were able to see from the cluster of dots, the western portion of Santa Barbara, where the actual downtown city of Santa Barbara is, has the highest concentration of policies. However, if we start to query, we can see that some of the policies within this area are high-valued properties. Few in the standard, but now we're starting to see 2 policies at $760,000, and now we're getting into the millions. Using some of the context behind this space, this is a high net worth area. So looking at just the count of policies won't tell enough of the story. Here we'll take the count of policies, and now we're going to re-represent them based on the total insured value. This is the value of the properties themselves. And we can see that although there are only 1 or 2 points in some of these areas, they are worth as much as 10 or so policies down below. And again, we can re-represent that now as the total replacement value. the amount of money it will take to rebuild the home once the property has been destroyed. And another thing using the tessellation is now we have this standardized grid. Accuracy matters during these events. We can talk about addresses, but addresses can refer to multiple areas, directly over the rooftop, for example, or the street address. Is it the street address immediately in the center of the parcel or to the northernmost extent? Using these grids, the analyst can communicate by saying, here at Alpha India 14, this is the situation with the insured value, and querying that information. And everyone that pulls that data is able to see the same view and exploit the same data. This view can easily be used then and repurposed for the claims management portion. After the blaze has been contained, we can look at where the fire perimeter engulfed different properties and visualize them by darkening the hexagonal bins and adding proportional symbols looking at the total losses that have been recorded. Some of these areas may not have had claims yet, so this will be a living map for decision makers to look at. But looking at concurrent events, one thing about wildfires is that it's not just the wildfire that can lead to damages. 3 months after the blaze was contained within Santa Barbara and Ventura County, a large Pacific storm was coming towards the area. And while rain seems like a welcome relief from the wildfires, many of the deciduous forests had been burned, leading to the risk of mudslide within these areas. So the homes that were not burned in the blaze are still at risk. Now, under the traditional common operating picture, most organizations don't have a way to compensate for this, to look at the evolving situation or anything outside the parameters. This area now has a completely different topological feel to it because of the area being burned. So what is the risk with this storm? In a single afternoon, an analyst at Esri was able to put together this representation of the new landscape, looking at what areas were scorched and overlaying a USGS elevation model to look at what is the likelihood of debris flow. Again, this analysts, their primary responsibility was not mudslides, nor were they a specialist in it, but they were empowered by the common framework to be able to put together quickly and easily this map to export to several of the local agencies. Here we can see what is the threat of mudslide based on the elevation, the slope, and the terrain. The darker the red, the more likely it is that a mudslide will occur during the rainfall. This map can also be represented quickly and easily in 3D. Here, this Esri 3D scene takes that information and overlays it. Again, no 3D data has needed to be imported in from the organization. It's already loaded in, so you can get an understanding of why different slopes and terrains may have it. And here we can ultimately change this view based on if we want to look at the severity of the mudslide risk, the concentration of policies, or anything along those lines. But for many of the decision makers within an insurance organization, their main concern is going to be where do we have policies and what's at risk. So here this quick dashboard was made by a different analyst leveraging that same map from the first. This took an afternoon to make and no custom coding was required, where we can look at now the number of policies at risk, the total insured value for that area, the total replacement value, and what's at risk based on the threat zones. In this case, the stakeholder wanted a scale of 1 to 5. 5 being the most exposure and the greatest risk of mudslide, whereas 1 was just moderate risk. Here, the layers list can be quickly used to look at policies as single dots or the aggregation. Again, using the concentration, where the colors now have been changed so that they better highlight the situation. So if we look at the policies that are at risk as individual dots, we can quickly run an analysis to see what's at risk. I'm going to do select by circles. And here we can see that within that area, there are 3 policies at risk, almost $1 million worth of insured value, and almost $500,000 in replacement value. But the majority of them are within the second tier, whereas up above, they're in the higher tiers, and there's greater risk to the insurance company. The reason dashboards like this are so effective with decision makers is that it takes very little training to get started. It's intuitive in nature, and the only thing that can be interacted with is this widget here on the side. The decision maker is never more than 3 clicks away from the insights to answer their questions. If, for example, they want a different type of representation, on the back end using the original map, the analyst can change that and it updates this application here dynamically. Using these types of applications and information products, analysts can quickly disseminate their findings to decision makers in a way that they can understand so that when crises emerge, people have shared situational awareness. Thank you for joining us today for this look into how to manage risk using location intelligence. We look forward to seeing you in our next video installment on how you can actively manage your portfolios and better understand your customer data using our software. Thank you very much.